Is the stock market headed for turmoil this week as we have the S&P 500 nearing all-time highs and we see the fear and greed index almost in extreme greed territory? Is there too much complacency in this market, and are the bears about to come roaring back this week? Now, when we come over and look at the 1 week performance of all the sectors out there, look at energy, by far leading the way, up 5.84. Then we look at this article right here. Bets oil will hit $100 a barrel, surge on fears of wider Middle East conflict. Now, as we come over and look at crude oil real quick, we've been talking about this area of the profile, not only because it was an area of high volume, but also the fact that when we zoom this chart up here just a bit, notice we've had this A to B equals C to D pattern. Now, we've been able to go ahead and complete that pattern on Friday. We have quite a selling tail on top of that candle. What I mean is the candle body starts at just below the 50% of the range and goes down to roughly the lower third. So buyers pushed it up, but then towards the end of the day, we did see sellers starting to come back in and smack it down. We look at crude oil out here on an intraday basis, and we can basically see from 2 o'clock, oil put in a double top, started to go back lower. However, is this news article right? Will oil be on its way to $100 a barrel? Well, for that, let's go ahead and look at oil out here on the weekly chart. Now, on a weekly chart, we can see we have quite the bullish candle. I don't see any ABC structure on the way up at this point, but when we zoom this out a little bit, how far away is 100? Well, it's not really that far up. And if we notice, we've had this consolidation right here. I'm going to go ahead and I'm going to draw this out basically how I would look at this consolidation, roughly in this zone here. Now, within this consolidation, if we're going to break out, how high would we expect the market to go? Would be very simple. We would expect that we can double this consolidation, and that would actually project that oil can make it somewhere right around the $107 price point, which when we look left also correlates very well with prior swings in the market. Now, this will not be the favorable outcome for us at the gas pumps. Now, we can see this week we're starting to basically kick off earnings season, and for me, it's really going to kick off on Friday. On Friday, we have JP Morgan, we have Wells Fargo, we have BlackRock, just to name a few. We can see right here, this article basically lays out that JP Morgan, Wells Fargo to kick off bank earnings. But look right here, the Fed rate cut may spark more economic activity, but diversified banks may not benefit as much as smaller banks. So maybe this will be the case where we start seeing KRE outperforming the XLF. We can see that KRE, for all intents and purposes, has this upper level consolidation. But one thing to note about this is we're kind of, wedging up through this area. We have a low, higher low, and we can make the case that we have one recent high, but for all intents and purposes, we kind of have a topping out of the highs at this level. Now, are we building calls to go higher? Because as we come over and let's say look at XLF looks like it's on the verge, getting ready to break out. We look at stocks like JP Morgan, basically having a double bottom-ish type of pattern. If we can get through this little area right here, we can see JP Morgan running back up towards the highs. We look at Wells Fargo, and Wells Fargo, we can see we also have a double bottom pattern here. Bottom number one, bottom number two, and now we can make the case that we also have this ABC structure on the way up. If we grab our Fibonacci extension tool, we measure A to B equals C to D. That gives us a price projection at about 59.77. Now, if indeed Wells Fargo is going to go higher, it must get above this high volume area here. If it does, then it's going to be basically an open door to go ahead and run up towards that 59.77 price point. Now, when we come over and look at the Dow Jones versus the transportation index, I'm going to zoom this chart up here just a bit. Notice the Dow is not that far away from all-time highs. It was just 1 week ago where we saw the Dow making new all-time highs. However, the transportation index has been lagging. Now, we were able to breach above the trend line momentarily, but now this past week, we came back down lower, and notice the diamonds were closing near their weekly high. However, the transportation index just wasn't following along. Then we come over and we look at HYG versus SPY. Notice the SPY is right near all-time highs, and now we're starting to see a little bit of weakness out here in HYG. HYG, for those of you that don't know, is high yield bonds. Now, when HYG was zooming up here, it gave me a little bit more conviction that the market was probably going to go ahead and try to push a little bit higher. But now To me, it looks like we're flashing some warning signs out here. Then we look at the yield curve. The yield curve, if we get back below the red line right here, the yield curve will once again be uninverted. We can see that steepening of the yield curve has most certainly came right back down as of recently. And with recent economic data, we can see the market now is only pricing in a 25 basis rate cut, 97.4% chance at the next FOMC meeting. Jay Powell will only be cutting rates by 25 basis points. But wait, we have a lot of economic news that's going to come in between now and then. For instance, on Wednesday, we're going to learn a little bit about what they had to say during the FOMC meeting. We get the FOMC meeting minutes at 2 p.m. Then on Thursday, we're going to get the reading for the CPI data coming out. Regardless if you believe it or not, we're going to see what those numbers are. And as we get closer to the elections, we got to believe that they're probably going to try to pad those numbers a bit. Then we come over and look on Friday, and on Friday, we get the core PPI coming out along with preliminary consumer sentiment and preliminary inflation expectations. I want to make everybody aware, Apex 7A 80% sale off all their valuation accounts, passing as little as 1 day, $35 reset fees, and even better, $85 activation fee across all account sizes. If you'd like to take advantage of this offer, use the link in the description box down below. Use promo code Mike at checkout. Now, I have a very important stat I'm going to share with you guys in a few moments, but again, we got to pay attention to what is going on in the Middle East. And we can see from when Iran actually attacked Israel, we can see some of the sites and some of the satellite footages are starting to show that, yes, indeed, Iran did do a lot more damage than what a lot of the mainstream media is saying. And we're still waiting to see what Israel's response is going to be to that attack. Now, keep in mind, when they go to attack, and if you start seeing any big downdrafts in the market, we've been talking about this quite a bit on the live stream. One of the telltales that we want to pay attention to is when the market starts coming down, is crude oil starting to rocket up? If so, that could be a clue that maybe, just maybe, the market is going down intraday because of what is going on in the Middle East. Now, if you want to make sure you don't miss my next live stream, make sure you're subscribed and you have the bell notifications turned on for all. Now, we come over and look at this stat real quick, brought to you by Wayne over here on Twitter. We can see that basically what this goes on to say is, whenever January through September is greater than 10%, I want you guys to pay attention to what happens in the fourth quarter. And more specifically, what happens the week of October 7th through the 15th. If we go ahead and we look down here, we can see out of the last 14 occurrences, you can see we've only been up 4 of those times, down 10. Yikes. Not looking very good. And we always know October could be an iffy month in the stock market. So most certainly what we want to pay attention to. However, if we look from October 27th through December 31st, we actually get a very good reading where the market is up 13 times and only down 1. So maybe we see a little bit of turmoil in the markets this week, but maybe, just maybe, that'll be nothing more than a buying opportunity moving forward. Now, if we come over and look at the dollar index, last week we saw the dollar index was ripping and roaring to the upside. We've had 1, 2, 3, 4, 5 consecutive days up, and Friday was a very healthy day on the way up. Notice all along, as the price was making new lows, the MACD was not. We had MACD divergence. Now we've already come into our structure breakdown point. First time we come into it, we expect the market to either consolidate or get a little bit of a pullback on the way down. If we start pushing through it, the next area is really the next little structure breakdown point right up here at about 103.60 to about 103.69. And also, if you're playing this lopsided double bottom pattern, also completes right up in that area. Now, with the dollar going up recently, one would think that gold would be crashing lower, but gold, for all intents and purposes, is doing nothing more than consolidating up here at these upper levels. And we can make the case that this could be part of a bull flag pattern. Now, I am still favoring gold dropping down to about 26, 27, and then we'll see, do we start to firm up around that area? Now, if we start to see more uncertainty with the Middle East, then we could see gold spiking above that price point. Now, the problem with that is I don't really have any price targets. If we're really looking to try to target something out, we can kind of make the case and playing this, little flag-ish pattern that gives us a price completion of 27.62. So if we start making new all-time highs, this will be the target location I most certainly want to focus on. Now, let's jump back over real quick and take a look at crude oil. Now, on the weekly chart, we talked about some real upper levels, but in the short term, could we start to get a pullback? Now, if we do, the first area I want to look at is this prior swing point, which comes in about 72.43. Now, if tensions simmer over in the Middle East, we'll probably see crude oil starting to come off quite a bit. However, I really don't think tensions in the Middle East are going to ease up at any time in the near future. Now, we come over and look at some of the high flyers out here, like NVIDIA. NVIDIA, we have this ABC structure on the way up. We could actually be making another ABC pattern on the way up as well. But for all intents and purposes, right now I'm watching this 132.99. Now, if NVIDIA starts coming back below 113.07, that will negate that pattern that I'm looking at. I'll say, all right, you know what? That pattern has now been invalidated. It was a busted pattern. Let's go on and look for something else. We come over and look at Microsoft. Microsoft not holding up very well. Actually, Microsoft's been tumbling down just a bit, just barely missing our ABC structure on the way up. Now, if Microsoft's going to start to firm up, maybe we start to form another ABC pattern on the way up. Now, for that, I want to do a quick measurement with the Fibonacci retracement tool. Notice right where Microsoft is at currently, the 61.8 level. This could be an area where we start to see Microsoft starting to turn on the way up. Now, if we can come all the way back up above this area, that could set up a larger ABC pattern on the way up. However, we need to see evidence that Microsoft is starting to turn, which we do not have at this moment. Also, we want to pay attention this week out here to the volatility index. Right now, we saw on Friday, the VIX was down 6.25%. But look, we're trading right here at 19.20. We look at this on an intraday basis. We can see on Friday, news came out, we gapped down, we came back up, and we started to meander a little bit lower. But if we start to see prices basically consolidate, and what I mean by prices is the indices, and we see the VIX starting to spike up, that is a cue. Watch out. We see bigger players starting to hedge, and there could be something on the horizon. Could be about this sync stocks, and that would also correlate very well with that stat that I shared with you guys moments ago. Now, as we come over, look at the S&P cash market real quick. Notice on the weekly chart, what are we doing? We're forming a rising wedge. Now, normally this is going to be a bearish pattern, and that could get us down towards some of these lower levels. MACD indicator right now is kind of weak. We look out here on the SPY. Notice we closed near the upper third of the range, a little bit of a buying tail on the bottom of that candle. Now, the SPY does have an ABC completion at about 592.09. As we drop down to the daily chart, we can see on Friday, we had that gap on the way up, and we're right within striking distance of making another new all-time highs. MACD indicator right now, however, just kind of flattened at elevated levels at this moment. Out here on the 1 hour chart, you can see the MACD indicator has firmed up quite a bit. Then as we dive down to the 30-minute chart, this zone right here is an area that we've been watching for the last couple of days. On Friday, we were able to get into it. The first time we got into it, we got slapped back down. Now we're trying to push up and out. Now, the MACD indicator does look strong at this moment on the 30-minute chart. We have to look for clues next week to see if we start seeing weakening of the MACD indicator. Notice on Friday, we were able to close well above value area high, which came in at 571.80. And also, as we come over and look at the weekly volume profile levels, notice value area high is down here at 5780.75. However, the market closed substantially higher. Then we have the point of control down here at 5761.25, with value area low being 5738.75. So guess what this means? It is highly probable that this week or next week, we're going to come back down and test that level. And that would also correlate with a weaker time period, like that stat I showed earlier in this video. Keep in mind, this is going to be a untested point of control as well. So if we can get down below value area high, maybe, just maybe, we have a shot of coming right back down towards that point of control. Now, if we do start to go lower, let's say we start breaking value area low next week, watch out. We're going to be looking for this high volume node right over here, which comes in at a price point of 57.20. Then the minus development area about 57.12. Anything below that, I'm going to be watching for 5697.75. Now, when we come over and look at the daily profiles, this is an area that we're talking about for several days. We had that structure breakdown point, candle wick up here to the candle body. We sliced right through it. We were finally able to come back and test it on Friday. Now, the first time we came into that area, boom, slapped right back down. The second time, maybe this is going to be a double top, or maybe, just maybe, we're going to try to push up and out. Notice on the daily profile, what are we doing? We closed above value area high. So from a daily perspective, 5786 is going to be value area high. The point of control will be down here at 5775.00. Value area low is going to come in at 5752.50. Now, ideally, fingers crossed, I would love nothing more than to see the S&P go ahead and gap up on Sunday night. If that's going to be the case, I'm going to be looking for markets to go ahead and start making its way back down towards testing this untested value area high. Now we come over and look at the Qs on the weekly. We're not as close to all-time highs as we saw in the S&P 500. We had a hammer candle out here last week. MACD indicator really not giving us a huge edge at this moment. We're really having a hard time breaking through this high volume area on the composite profile. Then as we dive down and look at the daily chart, you can see we had that gap on the way up. But keep in mind, with all the indices out here, we still have that gap from the FOMC. We still have not come back and got filled. So if we do see weakening of the markets this week, that gap will be an area I want to focus on at 471.41. However, if we can get above value area high out here from Friday, then I want to go ahead and look and see, okay, can we go ahead and continue to go ahead and try to push higher? Right now, the MACD indicator still looks strong on the 30-minute chart. Then as we come over and we look at the weekly volume profiles, notice similar to what we saw with the S&P 500, we are closing above value area high, or we did close above value area high, which came in at 20,142.75. We have the point of control all the way down here at 19,954.75, with value area low being 19,881.75. Now, keep in mind, if you notice where the location of the point of control is, very close towards value area low. So if you look to play a rotation down off the weekly profiles, instead of using the point of control as target number one, I instead would want to use this area right here, about 20,045. Then the second target could be point of control value area low. Anything below value area low, we want to go over here and look at this target right here, this high volume node at about 19,793. Then down here, this minus development area, 19,741, and then that untested point of control at 19,664. As we dive down, we look at the daily profiles. Notice what we see. We are also closing above value area high. So just like with the weekly, within the next 1 or 2 sessions. So on the weekly profile, one session is defined as 1 week in time. So either next week or the following week, highly probable we're going to come back and test that level. When we're dealing with the daily profiles, one session represents one day. So that means within either Monday or Tuesday, I would expect value area high to come back and get tested, which comes in at 20,179.50, with the point of control down here at 20,064.00. Value area low will be down here at 20,024.50. Now, if you're looking to play a rotation down, let's say you're looking for a little bit of weakness. You're like, you know what? Israel is going to go ahead and spark some more tensions over in the Middle East, and you're looking for the rotation down. Well, we can use all these high volume areas as potential additional targets to the downside, instead of just going ahead and trying to target the point of control as a first target in a volume profile rotation trade on the way down. Now, if we open above value area high out here on Sunday night, I will be looking to try to take trades back down towards that price point. Now, we come over and look at the diamonds real quick. We see on the weekly chart, we had a hammer candle, and the previous candle was a candle of indecision. And again, we really haven't got much resolution just yet. Out here on the daily chart, you can see the MACD indicator kind of flattened out up here, and it looks like, for all intents and purposes, the Dow is ready to make new all-time highs. Out here on the 4-hour chart, MACD indicator is still not making it down towards the zero line. Then on the 1-hour chart, we have a nice, strong MACD indicator, a good separation of the lines at this moment. So it's going to be critical this week. Can we go ahead and stay above value area high, or do we start to pull back down? Notice the Dow also closed above value area high on Friday. And if you're looking for a big pullback in the market this week, early on, we really have no major economic news. All the economic news really starts on Wednesday and beyond. So I don't really see what's going to sway the markets drastically in one direction. We come over real quick and we take a look at small caps. Small caps, basically a doji-ish candle, closed in a little bit more than the 50% range of that candle. On the daily chart, we had that gap up and we did not come back and try to fill the gap. For all intents and purposes, we're hanging right here near the high volume area. But on the Russell, we had the gap from Friday, but let's not forget, we still have this gap right down here at 211.59 that still needs to come back and get filled as well. Out here on the 1-hour chart, you can see the MACD indicator looks extremely strong, and then you see that gap right up in this area. Now, this area right here, we had mapped out in pre-market on Friday, and you can see that's exactly where we came right back towards. All right, we came up into it, boom, slap back down. We came up into it, slap down a little bit, and now it looks like we're trying to push up and out of that area. But keep in mind, the Middle East is going to be front and center this week. If it simmers down over there, then I think markets go higher. If the tensions ratchet up, watch out. We're going to probably see stocks come crashing lower. Now, if you guys want to learn how to place stop loss orders in NinjaTrader and the difference between a stop market order and a stop limit order, make sure to watch this video right here.